We ended up seeing $178 million worth of confirmed bullish calls come into this, and a massive bounce from the bottom happened. And what we're going to do in this video is go over if I think Tesla's going to continue to move up to 270 and 280. And while we did end the day with a lot of calls, this is not how it started. 6 hours ago, I posted on Twitter and I said that PayPal, Airbnb, and Tesla were the highest flows of the day, with only 320,000 confirmed flows on Tesla. 2 hours later, I updated everybody showing that now Tesla was increasing up to $7.66 million worth of unusual options activity. From there, we saw a huge move. I took 2 trades with our trading team. It's completely free if you guys want to trade alongside of us every day. Make sure to follow me here and also check out our Discord community. But I traded 2 trades, one to the downside and one to the upside on Tesla. Now, I bought back in down around 258 because I saw that there was a lot of flow coming through for the rest of the day. And obviously, we ended the day with $178 million. If we move over to the chart on Tesla, you're going to see that we started the day up here. We have this fair value gap up around 200 this morning. We opened up down at 9:30 this morning with an opening of around 247.99, and we started to run. As we let the day progress, we continued to move up towards this resistance area of 260. Over the past couple of weeks, I've been talking about 260 as a potential resistance. Number one, because we have this left shoulder that this right shoulder will usually end up with, and then eventually make this head and shoulders. That's why I've been saying I still think Tesla can move back down to maybe 220 to even $212. So we saw this order block come in. We're watching Tesla continue to potentially move its way up into that level. And then as we're watching this progress, you can see that we have a fair value gap show up and we start to push our way up into this resistance point. As we were moving into 260, this is when I started to go short because I knew that there was a chance we would probably reject and at least fill this fair value gap. When we have these green fair value gaps, we usually retack and fill these gaps very easily. The indicator that I'm running in order to show those is going to be Smart Money Concepts by Lux Algo. It saves me a lot of time when it comes to charting. So from there, we went short. You can see that we did push up, we pulled back, and then I went long again and rode it up to about 260. I didn't hold as long as everybody else did. It's a classic that I literally sell everything too early. But where we are now, we kind of have 2 things setting up. So we still have this head and shoulders pattern, which is happening here. The other thing that you're also going to notice is that we have this fair value gap over here at about $267.50 to $270. That level is going to be extremely important. The other important area is also going to be this level, this fair value gap that has not filled yet down to 255. So it's really right. We were talking about greed over the past couple of days, and I really went over this in the Tesla chat section of our Discord in detail with voice notes and everything. There is a chance that we could see Tesla move its way up to 267.50, fill the fair value gap up at 2. That would still keep us in a head and shoulders, a janky head and shoulders, but it would still keep us in this pattern. We could trap retail within this level, thinking that we're going to push up. But unfortunately, I just don't see a way that we push through 280 within the next couple of weeks and next month or so. So for the next couple of weeks, maybe we could see this push up, but I don't think that we're going to hold up over 2. I definitely will be going short around 272 to 200. If we zoom out as well, we also have a symmetrical triangle pattern that's forming. And a symmetrical triangle pattern forms, as you guys are going to see here. We come in and we make these highs, and then we come in and we make another low, and basically we begin to squeeze with making higher lows and lower highs until we eventually hit a point where we call our apex. And the apex is basically where these 2 parts meet. And what tends to happen is we will just consolidate within this range of 240 to 260 out until probably middle to end of October. And then from there, what will happen is we'll either get the subsequent breakout up through 280 and up to 300, or the breakdown from 240 down to $200. These are the levels that you're watching. If you take one thing from this video, this is the major thing. 280, we're definitely moving up to 320 in the next 6 months. If not, 240 and below, we are definitely moving our way down to $200 within the next 6 months. So we're coming into this culmination. We're starting to squeeze. I think the best thing to do on Tesla is to just sell cash secured puts and sell covered calls and play spreads between these two levels over the next couple of weeks, because I don't think we're going to break over either of them. I think there's going to be a lot of manipulation. We do have a fair value gap down to $223, but this here is how I would be looking at it. Now, as far as unusual flow, we did get a couple of unusual flows over the past couple of days, and I wanted to update you guys on some of those positions. One of those is going to be Amazon. We saw a lot of flow coming through into this back on October 2nd. We had this big sell-off on the 3rd, consolidated on the 4th, and today we're continuing to consolidate. We have this big order block that's sitting here. This is a bullish sign. And it seems that if we're able to hold $125 on this order block, that we should be able to see Amazon move its way back up to $134, maybe even at highs $138. The way that I'm currently playing this is an entry around this order block, a take profit up here, and setting a stop loss at a lower low down here at about $122.60. This would give us a 2.52 risk versus reward, which just very simply means that we are going to get back 2.5 times the amount of money that we risk. So we'll risk 3% of our capital, and in return, we should make around 6 to 8% of our capital, which is a very, very solid and very healthy risk versus reward ratio. If we move back to my Twitter, you guys are going to see that I also posted about Nvidia. We can look at the actual flow in detail, but I figured that since it's blown up here, because it's on my social media page, it's a little bit easier to read. This came through right here at 320, and the spot was at $447.70. Now, something that's extremely important is going to be this small letter right here, which is A. And what this means is this came in above the ask. On the ask. AA would be above the ask. And this is important because when an order comes in on the ask or above the ask, it means it's confirmed as a buy. This person did buy $11.5 million worth of calls, and these calls were bullish. This was not somebody who was selling calls to somebody or hedging out a position, at least to my knowledge. They could be hedging, but you'd have to have some insane position in order to hedge with something like this. This sweep is very important. It means that it all came in on one exchange. The expiration date is going to be 6/20/2025, so this is not anytime soon. And you can see that the implied volatility is only 50, which is very healthy. So this has everything that we need in order to be considered an unusual options activity, because we have size, 11.58 million. We have time, 6/20/25. This doesn't expire within the next day or so. And we have urgency, showing that we came in above the ask and showing that it's a sweep, meaning that it all came in on one exchange. Now, if we ever see something that is a sweep accompanied by a block, that's not bad, because that's at least coming through with the sweep alongside of it. Now, if we move over to TradingView so that we can get a better look at the price action and the chart for Nvidia, you're going to see here on the daily chart that we're basically over the past couple of months have been trading between $400 and about $500. If we come down here to the bottom left and we look at the past year, we're going to go to indicators and fixed range volume profile. We're going to click from the front and we're going to drag it all the way out to where we currently are. Now, yours might be a very ugly yellow and blue. I made mine a little more visually appealing just by making it a light gray and blue. Now, what these bars represent is something very important. This is not just the amount of shares that are traded in a day, like normal volume profile, which you can see I don't even run volume. I don't even care about normal volume anymore, unless it's like flow volume or reading the tape. But looking at these horizontal bars, this is going to show you at what levels in the past year were big money buying and selling. You can see the biggest levels are going to be right here. And then the second biggest level, well, really the biggest level is going to be this one right here from 160 to 173. This is called our point of control, which is why it has a red line. And it's called that because it's the highest level of volume. But we really have a big gap from like 323 up to $400. So looking at this, knowing that there's volume within this level, knowing that we're trading between this range of 400 to 500, it seems that unless they're buying for some insider trading reason. It seems that they believe we're probably going to move our way up to 500, potentially break through there, because if we break through 500, there's no volume up there. So we will move to 540, potentially 560. And I don't think this is a bad play for a leap. Not necessarily because I'm super bullish on the market, but because the risk versus reward is just sickening. Perfectly, I'd like to buy it down at about 435, 436. But looking here, up to about 500, and then setting a stop at a lower low, you're looking at a 1.62 RVR. If we could pull this down to 430, you're looking at a 2.3 RVR. I have a lot of money in the market right now, so personally what I'm looking to do here is I really want to see the market pull back. I'd like to see Nvidia pull back, but I do think I might take a position in this in the next couple of weeks. The other thing is that we do also have this megaphone pattern that's kind of forming here. And normally the way a megaphone would work is that we would bounce and try to push back up into the fives. So instead, what we're going to do is be patient, and we're going to actually add this symbol to all of the unusual flow that you can see over here on the right. Now let's talk about Sofi. I want to give you guys, number one, a trade, but I want to talk about Sofi, which has a really good opportunity happening. And I want to share with you guys a little bit of our trading bots and how I use them. Because if you guys want access to our Tesla trading bot, it's completely free in our Discord community, as well as our TSLQ trading bot, which is the bearish one, and you can get access to all the rest of our trading bots over in our Discord community as well. But we called out Sofi today. $7.62 is where Sofi was trading, where we ended up entering. I did follow a position. We did close the day right around here at about $7.65. So we did make about 3 cents so far, but what we're really looking for is this potential move back up to $8.81. And so what we're going to do is actually come on over here. We're going to look at TrendSpider. TrendSpider is a platform that is great if you're somebody who wants to script your own bots or further develop your trading. But to be quite honest, it's not absolutely needed. You have to understand how to script in the first place. This thing isn't just going to do everything for you. But what we do is I take all of my bots and my scripts and I make it as easy as simple as possible, and I put them all in the Discord community that you guys can just use without having to know how to script your own stuff. But basically, there's a couple of things that we look for with this Sofi strategy, and the first thing I want to do is show you guys the results. You can see here at the bottom right side of your screen, it might be a little small, but I'm going to go ahead and highlight these. You can zoom in on your phone, but basically you can see that this is the past 34.6 months. You can see that the net performance, meaning basically this is how much we would have made following this strategy, was 346%, and the asset itself is actually down 30%. And you can see this even better described here, where the light blue upward trend is our portfolio, and this is actually the underlying stock down here. So even in a downtrending market, this still works. Now, we would have taken 235 positions. We would have had a 68% win rate, which is not godlike, but it's still very, very good. And you can see here that our expectancy would have been 0.1. The average length of trade would have been about 7.5 hours, a 14 win streak, and a 4 loss streak max. So obviously this strategy is cracked, and I will show you it for the small price of $1,000. I'm just kidding. No, it's free. It's right here. So this is all we're looking for, right? It's very easy. It's very simple, but it's very effective. Basically, on the 65-minute chart, we need Sofi to close higher than the 11 SMA, which is this purple chart right here. I'm actually going to go through and remove these oscillators so it's a little bit easier for you to see. And I do want to state that if you're still here at the end of this video, props to you, because many people, they come in, they hang out, and I completely understand that. But like, we're getting into the nitty-gritty right now, and I want to continue to do this daily, and I want to do this because it's only going to help you, for you to understand these things. Even if you're a long-term investor, you can set up a trading script and a bot that will run completely for you on bigger time frames so that you never have to worry. That's the biggest thing, worrying. I'm not saying like you can't be a better trader trading yourself or investing, but even as a long-term investor, a lot of people watch YouTube for hopium. I mean, it's mean, but like a lot of my competitors are out there not really to like educate, but a lot of people are out there just to kind of be like, yeah, everything's great. And I'm not bad mouthing other people, but it's like a lot of times we just want to hear that our financial decisions are good ones. We don't want to actually hear the truth. We just want to hear that the decision that we made was correct. And so what I like to do with scripting, even when it comes to my investing, and I do this on bigger time frames, I do it so I can remove the emotion of saying to myself every day, is the stock overvalued? Am I paying too much for this company? Do I want to hold this for the next 5 years? Instead, I can use a quantitative, systematical approach to my trading. And so all we're looking for is the price to close over the 11 SMA, which is this purple line, as well as also simultaneously closing over the 50 SMA, which is that line, the red line that you're going to see on your screen as well, right here. And then the other one is going to be that the RSI has to increase, which means that the relative strength has to be going up. We can't have the strength moving its way down. That's not going to work. And you can see that all we have from here is a protective stop loss of 2%. I'm sorry, a take profit of 2% and a protective stop loss of 5%. So you might be saying to yourself, oh, 2 and 5%, that's not really, too crazy. You're right, but the way that this is actually set up is that we don't just close once we hit 5% or close when we hit 2%. For instance, these two trades here both closed for a 3.5% profit. They didn't close for the 2% take profit that we had set. And that's because this bot, like any trading script or strategy or recipe or anything you write, is only going to be able to execute itself after the candle has closes, which is why we're able to pull 3.7%, 3.58%, but actually lose a little more than 5%. Here we lost 5.82 and 5.28. So it's going to have its gives and takes, but it definitely has way more gives than it has takes. So that's the setup. Let's talk about this thing on TradingView and look at my other charts. Well, something to look at here is going to be the number one thing, which is this fair value gap down below. We do have some volume that's coming in and holding, and I do believe that if we see Sofi hold here, that we should be able to at least move our way up tomorrow back up to $8. $8 is where I'm looking to get out of this position, but if we're able to push up over 8, the next level is going to be up at 870. Now, as far as my stop losses, stop loss is going to be down here at 7.22%, and our take profit will be somewhere up within this range. The actual script will be up here at about 7.77 or $7.77, but I do think we could probably see this thing continue to run up to $8. I hope this video helped, guys. Thanks for all the support. I know it was a little more technical and we definitely got into the nitty-gritty and went over different things other than Tesla, but I promise you that all of this is just going to make you a better trader. If you guys want to get access to all my trades, as well as all of our live streams, the moderators trades, as well as much more, you guys can get access to that completely for free using the second link in the description. It's going to bring you to the upgrade page, which is $50 a month, but we give it away completely for free the first month because we want you guys to build up your capital, show you guys the value, but more so to show you guys that you can actually make money in a very stress-free and simple manner. The world doesn't want you to understand that because the world will make money by charging you to make complex things just as complex as they normally are. So I hope this helps, guys. Thank you for all of your support, and thank you guys for everything as always. Peace.